Good morning, ladies and gentlemen, and welcome to the PCF Group PLC live management Q&A. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company will be most grateful. I would now like to hand you over to Gary Strand, CEO. Good morning to yourself, and good morning to the rest of the team.
Good morning, everybody. Thank you for taking the time to join us today. I'm joined by Carolyn Richardson, our Chief Financial Officer.
Hello.
And Duncan MacDonald, our in-house General Counsel. Firstly, I'd just like to verbalise what we've put out in various announcements, which is to say how sorry we are for the delays and the distress and the general situation of recent events. Clearly, as we've said, the board has been very disappointed, and I understand that this has been a difficult time for everybody. So just to reiterate, we are truly sorry for the inconvenience that stakeholders and shareholders have experienced as a result of these events. Today is all about trying to tell you as much as we can about the past, as much as we can about the future, and to avoid giving you any politician-type answers. But there are limits to what we can say on some questions for legal or regulatory purposes. And that's why I've asked Duncan to join us today as our General Counsel, because I do want to give as full an answer as we can. And his attendance here is to facilitate that. So please take his attendance as our desire to be open and transparent rather than defensive. And from time to time, we may refer to Duncan, or indeed, we may ask him to speak on behalf of the group. That's all I have to say to open. So back to you, Tim. Or not back to you, Tim.
Thanks, Gary. Thanks, Caroline. We've had a few questions in pre-submitted beforehand, which we'll go through to start with. And I think maybe first of all, going back to the start, the first question is about the issues that have been discovered over the past 8 months and the process which ended in suspension.
Good morning, everyone. So we go back into last year, and as we were working with the auditors at the time and investigating a query that had been raised by the auditors, and looking into some adjustments that were required to our disclosures in the annual reports and accounts. And I asked a question about a specific balance. And this uncovered certain intercompany transfers between the bank and its subsidiary that were not supported by legal assignment. And then the knock-on implication of that was the incorrect reporting of large exposures under the PRA's large exposure framework. We obviously promptly informed our auditors as well as the regulators and our NOMAD. But given the significance of the findings and the implications of the matters, which included employee conduct and the governance environment they arose in, those discussions with our NOMAD led to the suspension of the shares, which, as you know, have recently been readmitted to trading this week.
Thank you. And on a similar sort of line to that first question, why the process has taken quite a long time? Can you detail why that's been the case?
Yes, there's been sort of 3 interlinked issues here: culture, the accounting irregularities themselves, and the finance team. So we launched an internal investigation followed by an independent investigation very early in April. And that had 3 phases that have run through to the end of October, early November. And this investigation gave us insight into the culture, as well as looking at the accounting irregularities and the large exposure issue itself. We've also performed a very thorough and detailed review of the balance sheet by the finance team. And we had to recruit and put in place the new finance team, who have worked very hard and done a fantastic job, and honestly, we cannot thank them enough. So the crucial thing around this was to make sure we did it properly, and did a thorough and comprehensive job. There's no prizes for coming back and doing this more than once. And finally, due to the nature of the audit opinion, it became the sole responsibility of the board to ensure that there was no misstatement, no material misstatement in the accounts. And therefore, for me as CFO personally, to be able to give that assurance to the board, we needed to make sure we did a very good, thorough and comprehensive job.
Thanks, Caroline. Another question on this same sort of theme is the role of the board and the audit committee throughout this time and their role in the issues and not spotting.
Well, I think that what people will understand is that being a bank comes with a lot of responsibility. The price we pay as a bank for having access to low-cost retail deposits is that we operate within a regulatory framework and to a set of rules which are both complicated and demanding. And PCF only became a bank relatively recently, and during that time has undergone some significant growth. And I think it would be true to say, and I think that the board acknowledged this, that maybe our operating infrastructure and our back office infrastructure was too thinly spread and didn't keep up with that growth, and perhaps didn't fully appreciate the level of rigour that was needed to be a bank. And I think, again, it's important to point out that the demands of being a bank are very significant, whether you're Barclays, HSBC or PCF Group. I think that what has evolved here is a situation where the back office structure of the bank didn't keep pace with the growth of the bank, and clearly that's a concern to everybody and it's acknowledged. The governance of the bank was working, it was fully functional, the audits were taking place, and it is difficult to pinpoint an exact issue or moment where these things should have been discovered. But what I can say is that once they were discovered, the board moved incredibly quickly to take action. We've hired a completely new senior team. We've put significant resource into where it needs to be put, and the board have been incredibly supportive and facilitated that plan to remediate this unfortunate situation. At no point, as far as I can ascertain, and I'm new to this, was there a request made to the board for additional resource in the past which was turned down. So this may seem like a politician's answer, but unfortunately I think that this is a situation which evolved over time rather than being able to be pinpointed at one specific event or point in time.
Thanks, Gary. In the annual report and accounts, you know, that EY didn't issue a clean audit opinion. Can you talk us through a bit why that was the case and the ramifications that may have for future audits?
So I get, it's obviously EY's audit opinion, and I wouldn't want to speak for them. However, in our opinion, we could have continued and got to a clean audit opinion. But to do so would have taken a great deal of time, effort, and cost. And that would have further delayed the publications of the accounts, arguably put the readmission of the shares at significant risk. And we believed, and the board believed, that that was not in the interests of shareholder value and not in the best interest of shareholders. And therefore, we thought it was more beneficial to accept the audit opinion and to get the accounts and the interims published, the shares readmitted to trading, and begin to move forward and build shareholder value. In terms of the implication, the disclaimer for on the balances as at September 20 does have a knock-on implication to the audit report that we will see for September 21. As EY couldn't form an opinion on the closing balances, our new auditor will not be able to form an opinion on the opening balances. So whilst there's nothing to suggest that we wouldn't have an audit opinion on the balance sheet as of September 21 that says the balance sheet gives a true and fair position, because of the opening balances knock-on implication, there will be a disclaimer on the opening balances and the income statement.
And building on that question slightly, the disclaimer of the opinion by EY is an obstacle to activity in the wholesale money market, e.g. interest rate swaps or securing retail deposits?
No, it isn't, and it hasn't been. However, as we disclosed in the annual reports and accounts for 20, the share suspension has impacted our ability to execute interest rate swaps and hedge our risk. And so we've been taking other measures to mitigate that.
Thanks, Caroline. We've also had a question on Summers, the largest shareholder within the group, and their intention with their holding in the bank. Have you got any?
Well, I think I'm not on the board of Summers, and I'm not Summers' representative. We have the type of dialogue you would expect us to have with a major shareholder, as is permitted under the appropriate rules. I'm not aware of their strategy. They haven't disclosed to me anything which leads me to believe that they remain anything other than supportive of the organisation and its future strategy.
And obviously we had the interims that were released this week. Are you able to give a timetable or trading update towards when we'll get the annual report for 2021 or a trading update for the rest of the year?
Well, as we've said on both accounts, we will get the annual report and accounts out in due course. We're not committing to a drop dead date on that. This is the first year with a new auditor. Everybody can appreciate that we are emerging from a difficult situation. In terms of the trading update, we have announced to the market that we won't be giving future guidance at this point and that we will recommence that probably after the annual report and accounts have been published. And so, therefore, even if I wanted to give a trading update, I'm not in a position to do so because we have announced to the market that we won't be giving future guidance at this point.
Thanks, Gary. And obviously over the last 8 months, and you put in RNSs and in the latest annual reports, there's been a series of remediations that have taken place and the change of processes at the group. Can you give a little bit of detail about the changing processes that have happened in the last 8 months and some of the changes that have been made at the bank?
Sure, yeah. Okay, so the first thing I would say is that the culture at the bank today has changed dramatically. Perhaps one of the things which was lacking was a willingness of colleagues to challenge upwards and speak up. We've put lots of work into cultural change in the bank. We have a very clear speak up type culture now. I find it inconceivable that these types of things would happen again simply because the culture has changed and they wouldn't be tolerated. We've done a couple of things on the structure of the bank. In terms of the back office of the bank, Caroline and her team has grown quite dramatically. We are eradicating manual single points of failure. We are effectively trying to bring our back office operation into something that I would call industrial strength, relying on automation and systems rather than people. And we're doing exactly the same in the front part of the bank. So one of the things we've got to do with the bank moving forward is accept that PCF Group has a core competency in originating, lending and servicing loans. And the challenge for us is to do that more effectively and efficiently. And as we talk about in the interims, we see our future as being a data-driven organisation, which is using systems rather than people to drive through efficiencies and support growth. And to think about how we can take the core competencies that we have, because we do know how to lend money and we do know how to service accounts, and to make the best of that. And to support that general direction of travel, we've made a big investment in people. We've got key hires in key areas. So we have a much enlarged and sort of a much more experienced credit risk area. We've created a data science area, and we're committed to being data-driven in everything that we do. And then at the very top of the organisation, we've been very fortunate to have been able to attract a new chair designate and a senior independent director, who I don't think anybody could doubt the calibre of. And so the fact that we are able to attract very good key people into the key roles in the organisation, that we are able to recruit people at the non-executive board level into the organisation, and we've got a very clear vision of how we want to take the business forward and the type of culture that we want in the business, which is non-hierarchical, open, transparent, ambitious. I think that work in the last 8 months has been very valuable for us, and we've deliberately chosen not to just focus on repairing the past, because we have to prepare for the future.
And on that last point, Gary, what are your ambitions, Caroline? Your ambitions for the bank going forward?
Well, I'll go first. My ambition for the bank going forward is to take what is now virtually 30 years worth of experience and data, use that in a modern way to create an organisation which can operate in a modern world. So we need to think about how we take the PCF brand, move that across any lending product, move that across all other aspects of credit management and origination, and see if we can do that in an automated digital way to really drive value for shareholders. 3 pockets of value I see moving forward: the economic value in the assets, the loans themselves, the economic value in the brand, because the more successful we are, the more valuable our brand is, and the economic value in the operating platform, because if we can create a world-class operating platform, then that gives us lots of alternative strategies to growth and value. So that's my vision for it.
Look, I agree. I think by doing the things that you say, Gary, we can create some real value for shareholders. The only main thing I would add is I think we've built a really good team. I think PCF is a good place to work, and I think by doing those things we can make it a great place to work, and that's also front and fore for me as well.
Thank you. This week, obviously, we released the interim results, which showed an after-tax profit for the business to the 6 months, half year 2021. Do you expect that trend to continue for the full year and going forward?
So, as we've said, remediation activity will continue to have a negative impact on our ability to generate capital and our profitability in the near term. It's super important that we perform those kind of enhancements and improvements to build those firm foundations for what Gary's just discussed. So a near-term impact from those.
And can actually building on this as well, sort of looking at the interims and the underlying state of the business and the balance sheet as we stand today.
Yeah. So as we said in our market announcements previously, the business has continued to operate in a normal fashion. Deposits have remained robust. Our retention levels and our ability to raise new deposits where required has been in line with our plan and our expectation. Credit risk in the loan book continues to be managed proactively and efficiently. We've also, in our new business originations, continued to focus on those higher quality credit grades, and the COVID-related payment plans continue to reduce. We prudently managed both capital and liquidity to protect the balance sheet, and the underlying core competence of the business remain unchanged, and will continue to improve and enhance those. So the potential for the business remains unchanged.
Thanks. Another question we received before, Gary, was someone noted you're interim CEO at the moment. How long do you intend to be in post? Is the group looking at starting the process?
Well, look, the reason I'm interim CEO is that there was a need for somebody, me, to become CEO in quite a in quite quick order. My focus has been very much on leading the team through some very choppy waters. I'm very proud to say that we've not only attracted very good new hires against a very difficult hiring background generally, and against a difficult background for the organisation, but also our key people within the organisation have remained with us and are committed to the future, and that's particularly important for us in our origination sales side of the business, which is, we're a relationship driven business. We are emerging now from those times, and this week, and we didn't know it was going to be this week when we set this up, the trading suspension was lifted. That's a big milestone event for us. The publication of the interims is a big milestone event for us. My focus has been getting us through that, preparing for the future, and not really on me, to be honest with you. But time is moving on, and I'm sure that there will be some discussions in the not too distant future between me and the board generally about the future leadership of the business.
Thanks. And going back to the interims, it was noted that and the annual report, the need and requirement for a future capital raise. Is that imminent? Is it required?
We'll talk about that. Well, look, all banks need capital to grow, and they either generate that capital through making enough profits to fund their own growth, or they raise capital for growth. We've talked publicly about the need to raise capital for growth, and in due course, we will make a decision about the timing and the quantum of capital that is required. But as we sit here today, the business does not have a need to raise capital for any other reason than for growth purposes.
Thanks, Gary and Caroline. And that's the pre-submitted question section.
Thank you, Tim.
Tim, if I may just interlude. Thank you very much for addressing all those questions. And ladies and gentlemen, please do continue to submit your questions using the Q&A tab. It's situated just on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Gary, Caroline, Duncan, Tim, as you can see, we received a number of questions throughout today's presentation, and thank you again to all those investors for submitting those. Could I please ask you, Tim, to read out those questions and give responses where it's appropriate to do so, and I'll pick up from you guys at the end. Thank you.
Perfect. Thanks, Jake. And so we had a couple of questions from Bruce. First of all, based on the recouping of previous performance-based remuneration from individuals and the bank's policy on that at the moment.
Thanks for the question, Bruce. Look, we've been very open and transparent about this. It's in our annual report and accounts. As you would expect at a time like this, the business is reviewing the position of remuneration in respect of former colleagues, and will take the appropriate action if it's commercially and legally feasible to do so. Clearly we can't talk about individuals. Clearly we can't talk about what may or may not be going on in terms of legal action. But what we can say is what we've said publicly, that where advice is that it's worth us pursuing individuals, then the board is committed to doing that.
Thanks, Gary. I've got a question here from David T. Given the high risk nature of mezzanine finance, can you explain the risk management internally on processes for your mezzanine property loan portfolio?
Okay. I'll answer this in the commercial sense, and you correct me if I've got any of this wrong. I don't think we do mezz finance. Our property portfolio is bridging. It's supported by a first legal charge with very conservative LTV limits. We've lent since the launch of the property finance product somewhere in the region of 200 million, 220 odd million since the day we started. We have never incurred a loss on any of those. So our property finance portfolio is actually a little bit of a hero product in the way that it performs, as can be seen from our public accounts. Okay with that?
Yes, yeah. Our impairment losses on that portfolio have been very low.
0.
Cursed it now.
We've got a question here from Paul H. Again, are you able to give guidance on how much of the increased costs are part of remediation versus how much we can presume will be ongoing higher costs?
Caroline?
So we're not in a position to give specific numeric guidance currently, but you're correct. There will be some increased longer term cost levels. As Gary mentioned, some of the areas were spread too thinly. There's a bare minimum of resources you need for a bank to operate within the rules and the requirements. So I think we will see a higher absolute cost base going forwards outside of remediation. However, we would look to mitigate and manage that as best we can.
Thanks, Caroline. We've had a couple of questions regarding the appointment of a new audit firm and how that process went, how you went about that process, and if you feel they're the right auditors going forward for the business.
Do you want me to talk about the process and then you can talk and complement that? Yeah. Well, as you would expect, we went out to tender for auditors and we invited firms to tender. We are a relatively small bank, and so we needed to find the best fit for us in terms of professional capability of the audit firm that was commensurate with our size of organisation. And clearly we do think that they're the right audit firm for us, without being sarcastic about this. Otherwise we absolutely wouldn't have appointed them. And McIntyre Hudson are a very professional firm, and we've been very, very impressed with our interactions with them to date. Clearly it's a big decision. EY had been auditors for a considerable period of time for this firm, and this is a key decision for the business, and I can assure you that the process that was undertaken was exhaustive, independent, and subject to lots of internal governance. That's the general overview of that. I don't know if you want to say anything else about McIntyre Hudson generally.
I mean, just to add, we've been working with them in a couple of areas already, and that has been working well and a good experience so far. We're obviously in detailed discussions and planning activities for ARA 21. A first year audit is never easy, and I think we have some additional challenges, but we're confident we'll be able to work through it with McIntyre Hudson to get to where we need to in due course.
Thank you. We've also had a couple of questions on the current share price and also rebuilding trust with shareholders moving forward. I think we've gone into a bit of detail about that. I guess going back to what we said earlier, the ambition of how to rebuild trust with shareholders.
Yeah, well, I mean, the share price is a mechanism of the market, and the market will put the price that it thinks is right. Rebuilding trust with shareholders is, for me, and I'm sure for Caroline and the rest of the executive team, the same as building trust with our colleagues inside the business and with our other commercial partners outside the business. The way that we build trust with people is to hopefully demonstrate that we're competent, hopefully demonstrate that we do what we say we're going to do when we say we're going to do it, and be as open and transparent as possible with people. Business seldom runs directly to plan or smoothly. There are always bumps in the road, and our approach internally is to acknowledge that, be very, very clear about the bumps in the road and what we're going to do to overcome them. So, whilst I'm chief executive, we're committed to being as open and transparent with with shareholders as we possibly can. Rest assured that one of the things, and of course we read the message boards and the share chat boards like anybody else. Rest assured that through all of this, the board has been completely focused, as is its legal obligation, on acting in the best interest of shareholders and maximising shareholder value. and we will continue to do that, and we'll continue to communicate as openly as the various constraints that we are subject to allow us.
Thanks, Gary. We've got a question from Stephen S. here. Can you explain why the defaulted receivables were written down to a level at which they could be sold for a 1.1 million profit? Probably for you, Caroline. Or Gary.
As part of reviewing our financial controls and procedures, as well as the balance sheet, review and substantiation work, we looked at our impairment methodology, and we looked again at the recovery rates, or our expectations of future recovery rates around these defaulted receivables. So where we'd seized the collateral and the asset itself, sold the asset, but there was a shortfall balance remaining on the loan, and we adjusted for that in the annual report and accounts 20, increased the provisions as people are aware of, and actually, by selling that portfolio, it crystallised that cash upfront rather than waiting over a period of time to collect what we could from customers, and gives us a clean position starting forward, moving forward. And we need to play to our strengths as an organisation, and you've got specialist debt recovery firms. These long defaulted receivables, that's what they do, is their bread and butter, and therefore we felt it was a sensible, pragmatic and economically made sense to sell those receivables.
Can I just add a bit to that? I think some of the comments I've read online, I just want to be absolutely clear about this. Sequentially, the events were that the revaluation of that portfolio preceded the selling of the portfolio. So the business put in IFRS 9 modelling in 2018. It is normal to carry out reviews of the functionality of that modelling. We did that. That led to a revision of provision rates. That led to a revaluation. And then, having seen that revaluation, we made the commercial decision to sell. And just to be clear about what Caroline says, we aren't a recoveries business. And recoveries, as opposed to collections, recoveries is a very, very heavily regulated activity. And organisations who can do it at scale can obviously derive more value from portfolios than people who are doing it subscale. So hence why we've said publicly that moving forward, we anticipate that a regular flow of defaulted receivables will be the way that we manage that part of our portfolio. And that's really beneficial from a shareholder perspective and from a management perspective, because it enables us to take volatility out of provisioning methodology, because we can crystallise future value of defaulted assets. So I think both strategically, operationally and commercially, it made a lot of sense.
Another question from Bruce A about the lifting of the share suspension and why nothing was said about how the company expects to trade going forward, or the longer term ambitions of the business. I mean, I think we've said a bit about that today.
Yeah, we've covered that. We've said that we wouldn't give any future guidance. Duncan will confirm that we had lots of internal debates, and we spoke to our Nomad, and we took legal advice as to the level of guidance we could give, if any, given the proclamations that we'd made to the market at this time. Yeah. The decision, was that we wouldn't be giving future guidance. The second, sorry, what was the second part of the question then? I forgot.
The second part was the longer term ambition of the business.
Well, what we at a very headline level, we say in the interims about how we want to move forward, and I've expanded on that today about a different type of operating model. And the future ambition of this business is to operate on a zero marginal cost basis. In other words, our origination and servicing platform is slick enough that for every new loan that we process, there is no marginal cost. We need to create a machine here which can process what we do as efficiently as possible. Now, the shape of that moving forward, the colour of that will come out when we publish our ARA.
Got a question from Phil B here. I'm not sure if you've got the numbers directly to hand, Caroline, but we can provide them at a later date. The value of current net loans and advances and customer saving balances.
I'm not sure we can give that, Duncan. No.
Currently.
And
It's guided.
The interim position.
yeah, I don't think we can give that simply because I think that would enable people to effectively work out future guidance, and we're not allowed to give future guidance or information which would allow us to calculate it at the moment.
We've had a question from Stephen S. on submitting 21 financial statements, which I think we talked.
In terms of the statutory deadline, we are PLC, so that is the end of March 22.
6 months after financial year.
Yes.
Questions we've got through. Can you give us guidance on your access to debt finance as a mean of raising capital?
Yeah, well, obviously there's several routes to capital for this bank and any bank, all right? And we're against the backdrop I've just said, when we're considering capital raising, when we're considering the methods by which we could raise capital and the appropriate methods, we have to act in the best interest of the company and the best interest of shareholders. And so if and when we do come to raise capital, we will consider all the options, and we will make a sensible decision on it. And when I say sensible decision, what I mean by that is that if there is a situation where existing shareholders are diluted, and I'm not saying that there will be because I don't know, we will be in a position to outline and defend exactly why we've gone the route that we've gone, because we are extremely focused on the fact that this has been a very difficult time for shareholders and they've seen a significant diminution of their value. Bring that down.
Had a question from Alan B. That comment, if you're able to comment on Bank Lumia's withdrawal from the RCF.
Well, it's a matter of public record that we don't have that facility anymore. No, am I allowed to talk about utilisation?
Yeah.
Historically.
Yeah,
okay.
sorry.
So that facility was put in place under the previous management to effectively provide an emergency firepower to drive growth. That facility was only utilised once at a very de minimis level for a very limited period of time. The commercial terms attached to that product did not make sense for Bank Lumia. We didn't see that there was a need for us to continue having a facility that we weren't using, and therefore in the normal course of business a decision was taken that we were effectively reporting on a facility that we weren't using. It didn't make commercial sense for our banking partner in that respect, and so we took the decision jointly to terminate the facility.
And I think maybe building on that question, the current banking facilities that PCF has.
Well, we obviously have our premium bank facilities. We have a Tier 2 facility, a Tier 2 capital facility with British Business Bank Investments, where we have utilised 7 million or drawn 7 million of the 15. We have more wholesale relationships as well for our treasury activities to manage liquidity as well as manage risk. as well as the facilities that we can access at the Bank of England, namely the term funding scheme for SMEs, where we have just short of around 60 million drawn. I mean, to add to what Gary said in terms of, in due course, we may decide that we want a similar facility to what we had with Lumia, probably structured slightly differently, and in due course we will consider what else we could need or want to put in place.
Thank you. And I think that's the question and answer.
Tim, if I may just jump in there, thank you very much, Gary, Caroline, Duncan, for updating investors this afternoon. For this morning, sorry. Could I please ask investors, ladies and gentlemen, the company will review all questions submitted today. As you can see, guys, there's been a number of questions that have come through in the live event, which, and I didn't want to continue just in case you're getting question fatigue. But of course, ladies and gentlemen, the company will review all questions submitted today, and they'll publish responses where it's appropriate to do so on the Investor Meet Company platform. Gary, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to the company, could I please ask you for a few closing comments? Thank you.
Yeah, thanks very much, Jake. Well, look, as I said at the start, clearly nobody is more disappointed by the board that we've had the situations that we've had over the past few months. And I know, because as I say, I read this, that there's a view that the board hasn't communicated with shareholders as regularly or in as much detail as shareholders would like. I can assure you that we absolutely were taking advice around what we could say, when we could say it, and we did our absolute best to communicate with you as clearly and as regularly as we could. Moving forward, my personal view is that there is a great opportunity here. This is a business which has a great track record, it has great expertise, we've got a great team, we've built a new team, and I suppose you would expect me to say it as CEO, but I am really looking forward to leading the team while I remain Chief Executive to really create PCF, what I call V2.0. And the term we use internally is that we start in the repair stage and we want to end up in the remarkable stage. This week's events are the beginning of the emergence from the repair stage, and in the coming weeks and months, we'll be able to tell you more about the remarkable stage. But we are incredibly focused on making sure that we use the competencies and systems and experience we have to drive not only exceptional shareholder value, but also a great experience for our customers, our future customers, our commercial partners, such as our brokers, and most importantly, because businesses don't succeed, people do, the colleagues who have stuck with us and joined us through this very difficult time. So hopefully when we're doing these in the future, we can give you some really good news about how the business is emerging and will emerge over the coming years. And thank you very much again for attending.
Gary, Caroline, Duncan, Tim, thank you very much for updating investors this morning. Could I please ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of PCF Group PLC, we would like to thank you for attending today's presentation, and good morning to you all.